What's up, you guys? Sean from Rest to Live, and I want to take a little bit of a lightweight journey into the question of, can Palantir be a $1 trillion market cap company? I put together a relatively lightweight presentation. I want to walk you through this. This is sort of the way we typically, in my world, start the process of evaluations, understanding potential. It's a very high level approach to understanding the fundamentals that we're looking at before we dive into the real numbers. I am happy to dive into the numbers, but I think there's a lot of folks who have really done that. So I wanted to approach this in a slightly different way and then propose that maybe it's the wrong question we're even thinking about, frankly. So as always, please feel free to share this. Please feel free to share your thoughts, comment on where you think I'm right or wrong, or how you would approach this differently. But for what it's worth, this is really my take on this right now. And I think that there is a great opportunity, but there's going to be a really big question at the end I want you to hold on for. And it's probably the most important question for the entire presentation. So as I often say, I'm not going to waste any time. I'm going to jump right in and let's start talking about this. Excuse me. So of course, my little bar here is blocking my view, so that doesn't help anything. So let me just move this over so I can actually show this to everybody. So what we're really talking about here is the $1 trillion question for Palantir is, do they have the ability to become one of the select few who get to being a $1 trillion market cap company? Does it really even matter if they do or not? And what's the potential either way if they do or they don't? So let's jump on in. There's not a ton of material, but I want to really talk through this. So a couple of the ways I was thinking about this in terms of how I was putting it together and what I want to go through was really around who are the current players, what are the businesses that they're in, and why are they able to reach this massive level? I want to talk about my approach of the how analysis. This is not going to be the most deep analysis you've ever seen, but I don't think it needs to be. If you can't do it on a napkin, you might be doing it wrong oftentimes. I want to talk through some of the opportunities I see as ways to really expand and potentially get to this massive goal. And then I want to pose the question of, maybe there's a different goal that is still massively beneficial to shareholders and to users of the product. So let's, again, jump right in here. So when I really went out and thought about who are the major players who are either already at the goal or approaching the goal, this is really the list that made the most sense to me to share here based on current market caps at the time that I put this together. So who's here? Well, Amazon, Apple, Microsoft, Amazon, and Tesla are all here right now. The next three closest as of the recording was Meta, NVIDIA, and Berkshire. Now, I want to take a second here to really talk through these different components and pieces, because I think it's important that we understand what makes these companies so thoroughly unique, but also potentially the opportunity that this means for a company like a Palantir. And by the way, you can use the same kind of a process or approach for any high-flying company with growth potential, okay? So it doesn't have to be Palantir. That's what I did the example on today, but we can really do this for anything. So let's just think about this quickly, right? Amazon has business to business with Amazon Web Services and all the associated products there within. They're selling things on the cloud. They're connecting businesses to their data. They're running and performing analysis and AI work. But most of us don't know Amazon for that. Most people who watch this know Amazon for being the largest online retailer that's ever, graced the planet Earth. So they not only have this massive B2B side of the house in a massive ecosystem that's built within that, they have this even bigger, more massive ecosystem around retail sales, online sales, e-commerce, delivery, last mile, as well as helping anyone who owns a business sell their product online. So they really have both sides of the equation, the B2B, the B2C, as well as the B2B2C. So they're fully covered across the board in ways to make and deliver on capital, make and deliver on growth, and return this to the shareholders. One could even argue you could split Amazon into two separate companies, Amazon and AWS, and have $2 trillion companies. Now let's talk about Apple, for example. Apple's not that different, right? Apple sells to businesses. I have all of my work devices are Apple products. So they have a massive B2B enterprise space for their products, for their softwares, for their connectivity. But Apple, of course, is a massive consumer business: phones, earbuds, laptops, devices, music, right? They also have storage that everyone pays for on their phone. I say everyone, but you know what I mean. It's another streaming cloud where they can get that sort of SaaS model in and around data storage. So again, B2B, B2C, B2B2C again. Okay, let's talk about Microsoft. Surely Microsoft can't be the same thing. I just realized I wrote Amazon twice on the screen. Sorry about that, everybody. With Microsoft, for example, we're now talking about someone that's maybe a little bit closer to Palantir, right? The core of Microsoft business is for sure B2B, right? They're running operating systems. They're running cloud business with Azure. Within Azure is an entire ecosystem, very much like AWS, with partners, with services, with connectivity, with analytics. They also have their own CRM systems built in. This is Microsoft Dynamics. They also have BI tools like Power BI as well. But Microsoft also operates a massive B2C program, right? They've got gaming, they've got devices, they've got the consumer business, they've got retail stores. So again, B2B, B2C, B2B2C again. Okay. Sorry about the doubling up of Amazon. Obviously, that was my eyes trying to balance it out and not doing it. But I suppose it almost makes sense, since I mentioned earlier, you could have really split it out anyways. But let's talk about another piece of Amazon as well that I really want to mention anyways. Forget about just the AWS and Amazon. They also have Whole Foods. They also have healthcare businesses. So you can start to get to a point with Amazon where you could potentially sliver off all these different companies and end up with $1 trillion business a few times over. Now let's talk about Tesla. Tesla's another interesting one. Tesla's sort of an unknown in what it really is or is going to be, right? Sure, they're a manufacturing company. They're making cars for consumers, but they're also making software at scale. That software is going to do a lot more than just what it does within the vehicles. They also have the ability to go to market around different services in this space, right? So it's more than just cars. That's the core, but we also know that they're involved in SpaceX, and we've got the Boring Company. We've got all these other components that are sort of built in. We've got roofing, we've got solar, we've got energy. Now, one could argue that the primary service of Tesla is to the consumer, so a B2C model. But I think there's a play that Tesla's really moving towards quickly here that's really going to be much bigger, and that is a true B2B product service with the technology they're building, with the software they're building, with the delivery services they're going to have here at some point in time. We also know they're working on everything from robots to autonomous vehicles to full self-driving. So you can see, once again, it's a platform with a lot of things being built on it, with extensible connectivity between the pieces and the ability for each piece to sort of support the other's efforts and goals of growth. Now, even on the other side of this, I want to talk about those that are almost there. And you can start to see how, it's the platform, right? So the first thing is Meta, right? Formerly Facebook. Of course, you think Meta at first and you think, okay, surely this is a business consumer platform. We go on it, we use it as a social media platform. That's how they bring in growth of ad sales. And that's how they sell that advertising to companies. So they've got that B2B model for sure. But there's a lot of things as a consumer you can do on there. You can leverage their marketplaces. You can leverage connectivity. They have devices that can work at home. They have Oculus glasses to access VR and AR environments. So they've got that B2C as well. And I also think there's going to be a massive play potentially for the metaverse to really come out here on top in terms of the way that we'll connect consumers in true usage-based advertising methods within this metaverse environment. Whether you believe it's successful or not isn't really a question at this point in time. It's more about, will it get to $1 trillion market cap? NVIDIA, right? NVIDIA is doing all kinds of things in the technology space. They're providing a lot of the technology that major companies are running on. So I'm not going to go too deep into NVIDIA, but I want to just call this out again. It's a little bit different than the others. It's really focused more on their specialties. And then Berkshire, just to round this out, Berkshire is a conglomerate of all sorts of different types of businesses, from chocolate to insurance to manufacturing to technology. So that's just another call out here that there's different ways to get here. And the reason I did it this way is I didn't want you to think like, if it's not tech, it won't work. If it's not B2C, it won't work. If it's not online e-commerce, it won't work. The reality is, although a lot of these seem similar, they are very different. They're run different, have different models and different go-to-markets. So anyone has the potential to get here. It's really about understanding how you expand on the enterprise business side, as well as create an ecosystem for growth where you have partners that help to drive you to that next level, okay? That's a big key for me and what I see here from the underpinning of this successful launch to get to $1 trillion. So here's the current situation as I sort of wrote it up here. And again, this is truly napkin-based math. So the current situation, again, as of the recording of this video, is that Palantir's current market cap is $22.65 $22.65 billion. They have a current share price, $11.20. And they're currently trading around, and I want to be clear here, this changes all the time. It can deviate by a few points here and there. So just bear with me for the sake of the conversation. Let's just say, based on the growth rates, based on the trajectory of the software, they're trading around 20x sales at the current stage. For us to get to $1 trillion market cap, we need essentially 44.5 times the current market cap value, okay? So I want to say that again. We need to see the market cap grow by 44.5 times. 44.5 times the current market cap to reach 1 trillion in market valuation. Doesn't mean it's impossible, but it's a big number. And assuming all things stay equal in and around shares, and this could be diluted, so it could be more shares, less shares, it could be buybacks, but just for the sake of simple math, assuming there was no change in the underlying amount of shares, the current share price of 11.20 at a 44.5 times to get to that market cap, of course, would end up with a share price around $498 to $500 per share. So this represents really like a 44.5x return on current shares. So a massive return on capital for shareholders. So I get why this is the question everyone keeps asking. And I also get why this is so important. But what I also want to call out is that as we get to this size, I just want to build in some risk and understanding that, there is some assumption I want to make that we're only going to be at about 10 times sales from a market cap perspective at this stage. So I just want to call that out for a moment here and say, look, if we're going to have this excessive, incredible growth, it's going to have to come from a lot of different areas. And some of those areas are not going to be super high margin. They're not going to get that sort of 20x mark that we typically see in high growth stocks. Okay. So I'm leaving this on the screen for just one more second because I want to call it out that even if it didn't get to a trillion, it still could be incredible gains here. And I think that's really the big question to ask is, where could this get to realistically? Where would it still represent a massive gain for me or for you or for anyone else who's invested? And especially if you're doing things like leveraging derivatives or complex plays, you can accelerate that growth rate in your personal investment as well. Excuse me. So I hope my picture is not blocking the view here, but I want to think really high level, and then I want to drill down a little bit more in here. So I was thinking in terms of, for us to get a 44.5% return, times return, we're going to really have to think about opportunities for new growth strategies. This is not only taking into account the things we know today, but how we grow the ecosystem, thinking about mergers and acquisitions, thinking about other ways that can scale out and do more, but it also has to do with scaling the business in a massive way. But we'll talk about that in just a second. So first and foremost, I felt almost a little dirty even writing this, but I wanted to do it anyways. We have to have this continued global conflict and need approach from the government sector. Now, the reality is the world is a complex place. The world is unfortunately a very violent place. There is a need for safety and security for everyone around the globe. But this includes more than just, of course, war or security. This is cybersecurity. This is food, agriculture. This is looking at and understanding energy, right? Anything that the government might need in any capacity, they really have to continue to not only win these contracts, but expand these contracts in both times of conflict and not in conflict. Although if we're honest with ourselves and looking at a company like this, there really is only times of public conflict and not public conflict. There's really conflict at all times. The other big piece of this as well, and I think we all know this already, is that they need to have a massive expansion of their enterprise business. This means continued high-level scaling of their big deals. These are the big Fortune 500, Fortune 1000 companies leveraging their products at scale within their organizations, but not just leveraging them. They need to be standardized on them at scale. They need to have a pricing model that takes that scale into account. They need to also keep an eye on customer acquisition cost and net revenue retention, because once they start to roll this out in a massive way, they need to develop complete and complex customer success and service teams. These teams' primary responsibilities will be attrition and churn monitoring and resolution or mitigation techniques. This is very important because while we're bringing in new business, we have to retain to the highest degree possible that current business and grow that current business, expand it, and add new services to it as well. These are very key things. You cannot let water fall out of the bucket and then just put more water in. You have to get a bigger bucket and keep filling it as you go. I think there's another massive opportunity as well for how we can productize the solution, make it more of a SKU approach. Anyone can buy it as they need it, add on it with ease, do this via an inside sales rep team, something that's very scalable and can be massive. So the way I think about this is how do we productize the solution for the mid-market SMB and startup space? This is a massive market. There's a lot of players here, but there's no dominant player. So this represents a huge realm of opportunity for them. They'll grow with their customers. As their customers get larger over time, they'll continue to use, standardize, and purchase more services and products from them. These are all the things that have to happen. I want to be clear here. These are not like, hey, if you get 2 out of 3, you're good. These are minimum requirements to reach this $1 trillion market cap. Now, on top of all of this, they need to continue to build out their partner program. This means not just service providers, not just implementation partners, but at some point we want to understand, are they going to bring in resellers? Are they going to bring in value focused organizations that can help to sell this without their hands in the material. Now, there's some that are doing this, but not at scale yet. We also need to build a bigger ecosystem in and around usage, right? Or certification, so that more people who are in the IT space or the analytics space or the data space, et cetera, et cetera, et cetera, we need more of those people to get certified on their own products so that they can go out and push their services or join the companies who need these services. Because if there's no one who can actually implement, run, and manage this tool, there's no point in buying it if you're a government, an enterprise business, or a mid-market SMB, et cetera. Okay. So if you're getting the picture here, we just keep adding concentric circles of needs, of growth, of ecosystem, of scale, of standardization. That's how this has to work. This isn't my opinion. This is how technology and software works. Now, again, on top of all of this too, we want to start to think about where and how it makes sense to start acquiring companies, because organic growth is only going to take them so far. There has to be an M&A process in place to not only have that organic growth, as we just discussed, but really that purchase-based growth, buying more revenue and in turn buying more market cap. Now, this in some ways can cause fluctuations in share value and price that can create stress and pressure on the market cap. But the vision has to be sometimes growing bigger by gluing things together and letting them work themselves out as they go. But this also means bringing in more talented people. This means bringing in more people who know how to create and build an enterprise level business. This means offering, again, all of these core services, matching them up and solutioning them with whatever and whoever they acquire. So just start to get that motion in your brain here, right? It's got to be bigger, standardized, solutioned. It has to be easy and frictionless and managed. It has to be retained and grown at every single angle they can do this, okay? This also means getting highly specialized, even more so in specific sectors and industries, understanding specific go-to-markets and use cases, and also more partnerships, by the way, with all those previous companies we just shared, the Microsofts, the IBMs, the Oracles, the Amazons. They have to keep pushing that further and further into the ecosystem that they can partner with all these players. All that said, that still doesn't mean they can get to $1 trillion, but certainly this means they can have exponential growth from where they are today. And I think that's a big key here. So as you're thinking about this, I'd be curious to hear, like, what am I not thinking of? Where's the growth going to happen that I'm not thinking? Now, I want to say something that for some reason I keep hearing this come up, and it's actually very concerning to me. I keep hearing people talk about this opportunity for them to offer a consumer-based product. That is not going to happen, okay? I feel confident I can look back at this video in 5 years, and this is not going to happen. There's absolutely no value and no reason to offer a consumer-based product on what they're doing here. This doesn't mean that a third party cannot license out the technology and create their own product that could be used in consumer fashion, but it doesn't make sense for them to do that because it strays too far from the type of business they're in. So I want to say that again. They can certainly find ways to OEM or white label this technology via another provider who might offer it in some sort of an app or solution, or a financial management software for a consumer to use or a retail user to get access to. But for me, that would be a nightmare situation. It's the last thing I would want this company to do is ever touch the consumer business. The consumer business is extremely high touch, requires heavy hands. You have to deal with consistent and constant issues from a product usage perspective. It is complex software, which means you're going to have massive customer success teams. And even if you create easy to use apps or templated approaches, it's not going to work. I can assure you, as someone who works in this space, that is the wrong thing to do. That will not get them where they want to be. However, that's organically doing it. They can also acquire companies that do have a consumer-based model where this can act as a back end to drive insights or drive that engine or drive that machine learning. Very possible they could do that. That's what I would like to see. If we're going to try to pick up that B2C space, it's got to be via acquisitions of something that already has the ecosystem, the process, the automation in place to deal with a consumer-based user, or even more of a low-level user in a B2B perspective, right? Like an analyst or someone along those lines. So that's sort of my thoughts there as well. So excuse me. So here's what I'm thinking, right? I know we all love to talk about this $1 trillion, excuse me for the coughing team. I know we all like to talk about the big picture, the $1 trillion numbers, because, it sounds good, but let's call a spade a spade. I think that realistically in the next, 10 to 15 years, I see no reason we can't get to a $500 billion market cap. I think it's a more realistic number based on the type of business they're in. Oh my gosh. My entire screen just reverted back to the wrong thing here. Sorry about that. Well, I'll dump out of this anyways, I guess, because that was all I had. So what I wanted to call out here was that maybe a $500 billion market cap is a much more realistic goal, gives us a chance of having a more predictable idea where we're likely to fall here, and then still has lots of room for growth. Because keep in mind, if we're talking about 44.5 times the current value of the company to get to $1 trillion, well, team, I've got great news. We're still talking about a 20 banger, right? If we get to 500 billion, that represents a massive, unbelievable amount of wealth for shareholders, for those who own any kind of share of this company. A 20x return, that's unbelievable. Now, granted, you might hear 10, 15 years and think that's ridiculous, but these are long-term plays. It doesn't mean it can't happen faster. But the timepiece is the most concerning piece always. And it's the piece that I'm most often thinking about in terms of these kinds of plays is I'm not looking for what it's going to do in a year. In a year, right, maybe this thing can double and get back to $20 a share. That's a 2x return from where it was just the other day. We're talking about a 20x return. It takes time for that to happen. It takes sales growth, revenue growth, retention growth, NRR growth. It takes a lot of factors to not only keep increasing, but trending up, and trending up for a long period of time. That's the only way you get to these kind of market caps. So this is a little bit different than my normal style. I want to put some things on paper, except for the last page. I have no idea what the heck happened there. It's like it reverted back to someone else's slide. But this is what I'm saying is whether it's $1 trillion or 500 billion, the opportunities are there. I don't think they're hidden. I think they're very obvious what they need to be. I think they're trying to execute on them. But I also think there's a really good community of people who are talking about this. So what I would appreciate more than anything is I'd like to get your opinions. And am I thinking about this wrong? Should I rethink the math? Should I rethink the way they're going to market? Am I being too conservative with a 10x sales in the next 10 years? Is that the wrong way to think? Maybe I'm completely off base there. And then also the biggest piece is this consumer model. Clearly, I have convictions the wrong play for their core business, but I've heard a lot of people say they don't think so. I'd love to get your thoughts on that and why you think maybe I'm wrong, maybe why I'm right, how you would do it differently. And look, with that, I just want to thank everybody for watching. This is a great community of people who really join in the conversation, really offer their thoughts, and I appreciate that so much. So with that, thanks for watching. I really appreciate it as always. I appreciate everyone coming by and leaving great comments and just in general supporting this channel. So with that, have a good day, have a good night, good hunting out there, and hey, who knows? Maybe it's going to be a 44 times return. That's going to make us all really happy. I'll meet you on the yacht. We'll see you later, team.